on Facebook. It'll take me just 1 second here. Hope you're doing well. Waiting for Facebook to come up here. And we should be live on Facebook. Hi everybody, welcome to today's lesson, to today's video. I hope you're having a good start to your week. Volatility is back, which is great if you know what you're doing, obviously, but it's great for day trading. We're going to talk about that and so much more in the next few minutes. But first, I need to share with you this standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, please be sure to check out the links in the description. If you'd like to trade with me for the next 30 days for just 49 bucks, check out the link in the description below. And if you find benefit in today's video, be sure to hit the like button. I would appreciate that. But for now, let's go ahead and get started. So I'm going to switch back to the webcam and turn on the slides, basically. All right, so today's topic is 3 steps to a successful trade. Basically, these are the steps that should happen on every trade, with some minor exceptions. Some scalp trades, trades that you get in quickly, in and out quickly, you don't need to follow these 3 steps. But in general, these are the 3 steps, and only 3 steps, you don't need more than 3, that should happen on every trade. So follow along here. For those that I guess have never heard me speak before, my name is Sami Abusaad. I'm Director of Education at T3 Live. I've been a professional full-time trader since 2007 and part-time 2 years before that, so 2005. I'm a lead moderator of the Strategic Day Trader Room, head of the Strategic Swing Trader Program, which is for swing trading, a newsletter for swing traders. Director of the Private Mentorship Program, which I just did last week, where I traded in person with 11 other traders, and creator of the Earnings Engine Program. You don't need to know all of that. I just want to say welcome. I'm just like you. I'm a full-time trader. I live, breathe, eat trading, and it's basically what I do 24/7, pretty much, other than sleep and eat, right? Okay, so back to the topic. There are 3 steps to every trade, again with some minor exceptions, which we'll talk about later. The first step is to find what I call a picture of power. A picture of power means find a compelling picture, a catalyst, something that's going to drive the price of the stock. Okay, I call it a picture of power. Feel free to call it whatever you want. Again, a catalyst, a momentum move, a news event, something that's gonna for sure have an impact on the price of the stock, that's gonna move the stock. But you need to find a picture of power. Here's some examples. One is a strong trend on the daily chart or a larger time frame, sometimes even on the hourly chart. Just a really strong trend. Extreme relative strength or extreme relative weakness on the intraday time frames. Sometimes I see stocks like today, I think it was the LVGO or something like this, where it just was selling from the get-go. The market actually popped really hard and this thing just got sold. I guess not all day, but in the morning for sure. When I looked at it, I thought, wow, does this have relative weakness to the market. The market popped, especially after the Fed announcement. This thing was just bearish. Now, that's not the best example of extreme relative weakness, but this was on its own page, basically, for the most part. And then number 3 would be gapping stocks. Stocks that gap on news, such as earnings, coronavirus-related news, whatever it is. Gapping stocks. Because gapping stocks, you know, I said one time to, I think I said it to a friend, give me gaps or give me death as a trader. Because I just love to trade gapping stocks. They make 5 day worth of move in sometimes 30 minutes or less at the open. If you know how to read the gap, what's happening on the daily chart when the stock gaps, you can predict whether it's going to go up or down, right? Before the market even opens. So after the open, it becomes just a matter of getting in it, figuring out a way to get in it. So I just love gapping stocks, but those are just 3 examples. There's many more. It just depends what you like to look for. I like gapping stocks more than anything else. I like extreme relative strength and weakness a lot. I like strong trends on the daily chart to play them on and then drill down to the intraday and play them on the intraday. But again, if you like some other examples, that's fine too. So whatever it is. So that's the first step. Find a picture of power. Every trade that I take, at least in theory, every trade that I take should have a picture of power on the daily chart. And again, it's not always a gap stock. My best trade today was the, I mean, it's you're gonna laugh now, but because it's not a typical thing that I do. It was the AKRX. It was a breakdown on the daily chart. So that's how I already had it on the daily watch list. Talked about it this morning. It broke down nicely. Again, this is not the typical trade. It's only 10 cents. But then the level 2 started looking really good. What I mean by the level 2 starting looking good, I mean it started to stack. Let me see if I can show you what I mean here. I didn't take pictures of this exactly, but let me see. So I started to get good level 2 on it. So I scalped it. I didn't really do much on the downside, but to the long side. So this was a breakdown on the daily chart. INO it got some news this afternoon. It popped really hard. It was a breakout. And it was a gap already. It was already on my charts because of the gap up this morning. So this is, but I'm just trying to look up here while I'm talking to you. Show you what I mean by a good level 2. Actually, I've done a couple of videos on level 2 trading. I'll be sure to add a link to those in the description later on, so feel free to check them out. But for now, it was like, it was like this. See this? When the bid gets really, really strong, 50,000 shares on the bid, 3,700 shares only on the offer. I want to play it long, and especially if there's no spread, right? Same way when you're, looking to play short. I want to have a strong offer and a weak bid. Okay, so today somebody in the room actually pointed out that the AKRX had a pretty good level 2. That's a pretty good level 2 to play short, right? And I like, it's not that I like low price stocks. I don't at all actually, but for level 2 trading, they're good because you don't have any spread. Right, there's no spread. So the AKRX, that's what I did, and then the INO was just a breakout. But the point is, and between the two, I ended up with, mainly between the two, I ended up with $3,500. But the point is, there's always a catalyst to every trade that I take. Okay. All right. So the first step is find the picture of power. The second step, find a high probability repeating pattern, a high quality intraday pattern. Now, the difficulty with this is you might wonder what kind of pattern are we talking about. I'm going to show you some examples, but also which time frame. Do I look at the 1 minute, the 2 minute, the 5 minute, the 15 minute, the 3 minute? Some people use the 10 minute, the 30 minute. Which time frame? There's so many different time frames available to you. I'm simplifying it here by telling you that if you're trading the open between 9:30 to 10:30, I would look at the 1, 2, or the 5 minute. Okay. I start off the day every day between 9:30 to 10 o'clock on the 1 minute time frame. So basically, I'm looking at 1 minute charts the first 30 minutes of the day. Between 10 to 10:30, I go to 2 minute time frames. Okay, and then 10:30 to 11:30 or so, I'm mainly on the 5 minute. So if it's an early morning trade, you want to be checking the smaller time frames. If it's a mid to late morning, you want to be looking at the 5. I don't use the 10 minute, but for those that do, it would be valid in this case, at this time, between 10:30 to 10 o'clock to 12 noon or so. I would use the 5, 10, or even 15 minute. And then if it's afternoon, if it's an afternoon trade, then I would focus mostly on the 15 or 30 minute. I don't use the 30 minute, but you can use the 30 minute. 30 minutes is kind of a long-term time frame. So for me, again, between 9:30 to 10, I'm mostly on the 1 minute. Between 10 to 10:30, I'm mostly on the 2 minute. Between 10:30 to 11:30, I'm mostly on the 5. And then anytime after that, after 12 noon or so, I'm on the 15 minute time frame. And I stay on the 15 minute until the close. The reason for that, this is another topic, don't want to spend too much time talking about it, but the reason is, if you look at the 1 or the 2 or the 5 in the afternoon, there's just too many bars. So for example, let me show you the chart real quick to show you what I mean. If we were to look at, just like any stock here, let's just say, I don't know, other than the INO, because the INO was already, it was exploding. So I want something that's like, give me a symbol, Microsoft, Apple, whatever, right? If you look at it in the afternoon on the 1 minute chart, you might not know whether the stock is in an uptrend or a downtrend. Actually, Microsoft had a gorgeous looking buy setup right here. See it? Beautiful buy setup. But I can't really tell by just looking at the 1 minute whether the stock, here I could tell, but I can't really tell whether the stock is in an uptrend or a downtrend. So you have to kind of zoom out or look at the larger time frame to really understand what's happening with it. At the same time, if we were to look at the trading something at the open, and if we were to use the 15 or a larger time frame at the open, by the time the stock moved, it moved like $5, $4. If you're starting the day on the 15, it's already gone. So in the morning, I like to go on the 1 minute, and then let me show you, let's say the 1 minute until 10 o'clock, how it looks. So here it is. But over here, I'm starting to already be seeing a lot of bars. So I go to the 2 minute to condense the data and clean up the chart, basically. Gives me just a better idea at 10 o'clock of what the chart is doing. I go to 2 minute. And then at 10:30, I'm already kind of, I want to condense it one more time. So I go to the 5 minute, right? Now I can tell what's happening. This was a pullback to the 5 minute chart. Does that make sense? And then later in the afternoon, or around noonish, 11:30 to 12 o'clock, I like to go to the 15, and I stay on the 15 until the end of the day. So this is just a kind of a tip. It doesn't have to be exactly on these time frames during those times, but it's just a way to simplify things. In the morning, look at smaller time frames. In the afternoon, look at larger time frames, and in between, look at midterm time frames, or whatever you want to call them, 5, 10, or 15. Okay, so that's the second step. Any pattern applies, any repeatable pattern. We know that stock price is correct through time, that stocks correct through time by going sideways, in which case you can look to play the breakout, right? Or they correct through price by pulling back. So ultimately, there's mainly two types of patterns, either pullback type, or breakout type. So that's a pullback, breakout, a continuation 1, 2, 3, that would be a breakout type pattern. We saw that on the INO today, 1, 2, 3. Climactics is the third way in which stocks correct, but that's rare when a stock just goes totally climactic. Like INO did go a little climo this afternoon at some point, but it didn't really fall apart. We saw also the MNK go a little climactic. I don't remember if it worked or it didn't very well. There it is. That's climactic. So that's actually the third way in which stocks correct, but it's rare. It doesn't happen that often. And scalps, sometimes you can look to scalp a stock off of the small time frames. Whatever the pattern is that you like to do, it's fine. You can do it if it's a high quality pattern that sets up at the right time, and step 3, timed with the market. So you want to get the right timing with the market, with some exceptions, of course, things that are completely on their own page. For example, what's a stock that's completely on its own page? I know we already talked about it, but something like this, completely on its own page, doesn't care about the market. The vast majority of stocks, 90% or more, are not going to be on their own page, but something like this is going to be on its own page. So if it's not on its own page, which is again 90% of the time, you want to time it with with the market. Now, how do you time your trade with the market? Okay, here's how you do it. If the market is bearish, I look for weak stocks that are basing at the lows, that are basically weaker than the market, or are on a counter rally, giving me a sell setup into resistance and or the declining 20 MA. Most of the time, resistance and the 20 MA coincide, so it's going to be at the same place. So again, if the market is bearish, this is how you time your trades with the market. I'm going to look for bearish stocks to play short, especially stocks that are showing relative weakness, that are weaker than the market, and play them short through either a base breakdown or on a rally and a sell setup. Okay? If the market is bearish but extended to the downside, far below its moving averages, oversold or extended, I look for so I can now play long, because it's too late to play short. I can play long, but only if the stock has extreme relative strength. What's extreme relative strength, you might ask? Extreme relative strength is when, like the INO, that kind of trade where the stock just doesn't care about the market. But honestly, extreme relative strength, the best example I can give you is when the market is really bearish, extended to the downside, starting to bounce, and you're eyeing a stock that's basing at the high of the day. That's extreme relative strength. Again, a stock that's basing at the high of the day while the market is going almost climactic to the downside. As soon as the market turns the corner a little bit, the stock is going to break out. Okay? We saw, I think, the OMI, but was too sloppy. Not OMI. It was OMER. OMER, I think. You see, that's the thing. Market was bearish, and as soon as it popped, that's when it took off. 3 o'clock. Let's take a look at the Qs. 3 o'clock. No, that's 2:30 actually. So that's 3 o'clock. The second green bar on the Qs, that's the 15 minute. Let's go to the 5 just to double check. That's 3 o'clock. Market bounced a bit. This thing broke out. So most of the time when I'm looking for extreme relative strength, if the market is, I do it when the market is extended to the downside, because most of the time you don't want to play long in a bearish market. Unless the market is really extended to the downside, then I look for extreme relative strength. And the best example to give you of what extreme relative strength is to find things that basically didn't budge. Market dropped a lot, they didn't care. They stayed at the highs. Okay? Or in the case of INO, but that's like extreme relative strength. It kept going up. So that's one way to play an extended market, a bearish but extended market to the downside. The other way is to find stocks that are climactic, that dropped more than the market. Does that make sense? Because that drop first, this is not a good example because it wasn't such a good climactic. Maybe Nuva was better. I don't know. Let's take a look at Nuva. Nuva. I can't spell here. You know, something like this. But again, I didn't really see any good climactics this afternoon. But again, when the market is extended to the downside, bearish but extended to the downside, I look for either climactics or extreme relative strength. Okay? Now, what if the market is bullish? What do you look for? You know what most people do? When the market is bullish, what easily stands out on our charts as traders, what do you think stands out the best? It's the weak stuff. When the market is bullish, what jumps out at us usually is weak items, right? But it's the wrong thing to do. When the market is bullish, you want to focus on playing bullish stocks that are more bullish than the market, that have maybe a better pattern, a better gap on the daily chart. So you look for strong stocks basing at the high of the day. Again, for stocks that are showing not only strong stocks with relative strength, that are either basing at the high of the day or on a pullback. Sometimes the market could be really strong, but too far up, too far above the moving averages, so overbought or extended. If so, then you can short, but you have to look for things that have stayed at the low of the day, extreme relative weakness, or that were climactic, so rallied even more than the market, because those basically the move got exaggerated probably by the move in the market, and as soon as the market tops out, they come right back down. Got it? So that's what I look for, and I told you what time frames I use, the main time frames during the day that I use. Now, what if the market is sideways? I look to go long bullish stocks when the market is at the bottom of the range, ideally, and short bearish stocks when the market is at the top of its range. You don't want to be, if the market is sideways, range bound during the day, you don't want to be buying when the market is at the top of the range and shorting when the market is at the bottom of the range. It doesn't even make sense. So you have to pay attention to it. Now, another way to time your trades, or to at least pay attention to, would be the reversal times. They are absolutely key to predicting moves in the market. Sometimes the top and the bottom, almost on a daily basis, is set by a reversal time. And there's 9 of them. I've done a video on reversal times before. So let's take a look at, let's say, the Qs. Of course, we have the, what do you call it? The Fed announcement today. So 10 o'clock probably set the low. See it? Look at this. 9:55. That's from 9:55 to 10 o'clock, that bar. That set the low. And then I don't, usually when the 10 o'clock sets the low, the 11:15 is what sets the high, not the 10, the 10:30. So this was probably, that's 10:15. So in this case, the low was set at 10 o'clock. If we look at yesterday's huge move, what time did it take off? What was the bottom? Look at this, 10 o'clock. So a lot of times you can time your trades with the reversal times also, which helps. Now, reversal times is another big topic, which again, I did a video on it in the past, so feel free to refer to that. I dropped a link in the description to my playlist, so feel free to review that. But all right, so with that said, let me show you some examples. Here's a stock that on the daily chart had a breakout today. Okay, stock was breaking out on the daily chart, was also gapping over a red bar. Even though you are day trading, daily charts and uptrends can have powerful moves that translate into big intraday dollars. You just need to find the intraday entry. So daily chart bullish. Let's look at the intraday. Intraday at the open after a gap had a 1, 2, 3 pattern. Perfect. And the market also had a 1, 2, 3, 4. It had a 2 doji bars, but look at the market also. Pretty bullish. Does that make sense? So good daily, good intraday, and good timing with the market. Pretty simple. This stock gapped under an hourly base, so it was transitioning to the downside. Okay. Zoom down to the intraday charts. 10:30 or so on the 5-minute. So that's a 5-minute breakdown. Didn't really drop that much. And the market was also on a gap down and bearish as well. See if that's the market. So timed with the market as well. This stock gapped up the previous day. So here's the thing about gaps. Sometimes they don't move. But it's almost always true that if the gap is good, is a powerful gap, and the stock didn't move on the day of the gap, it almost always moves the following day. So if a stock doesn't move on the day of the gap, I watch it, I try to watch it, sometimes I forget about it, but it's always a mistake when I do. This thing didn't move for 2 days in a row, but it usually moves the next day. Almost always, like I said, moves the next day. This looks really good as a swing short, by the way. PTLA. So if it doesn't move the day of the gap, just from memory, I'm looking at things that didn't move. Like this one didn't really move, right? The next day it moved. This thing didn't move very much. It had a doji bar. The next day it had a solid bar. So if a stock doesn't move on the day of the gap, it usually, and the gap is good, these other gaps that I showed you were mega gaps, so they weren't that good. But if the gap is good, is powerful, it usually moves on the next day, like this one right here. Broke the uptrend, didn't move though. The next day it followed through. So this stock here didn't move on the day of the gap, right? So it was watched, the next day was watched. Let me just fix this. Okay, that's fine. And then take a look. Next day had a beautiful, it popped at the open, had a pullback at the rising 20, right? And the 15 also was pretty nice as well. So we had multiple time frames, multiple time frame alignment between the daily, the 5, and the 15. Beautiful. That's what I live for as a trader. Multiple time frame alignment, a catalyst first on the daily chart, usually on the daily chart, multiple time frame alignment on the intraday, and timing with the market. And that's it. Simple as that. 3 steps. Let me now look at the questions in the room. I kind of haven't looked at the room and looked at the questions. So just give me a second and let me know what you think. Any questions? Okay, let me see. All right, Raj, that sounds good. Do you always live stream your coaching session? Just the initial part of it, the coaching, I don't, but the lesson part I do. Okay. What else? Anything else? Any other questions? Yes, they are, Robert. All right. I think there are no questions. We discussed the market before I live streamed the today's lesson, but I'm not going to rehash everything. I think the market is at a very, very interesting moment in time, so to speak. We could be turning really all out bearish after 11 years on the monthly chart, 11-year run up. This could end up being the top. And then I think we will find out in the next day or two whether this is the top or not. We have an hourly buy setup now on the Qs. If this fails, we are probably going to retest the prior lows. And from there, all bets are off if we retest, because we could probably continue lower. So I'm going to be watching the market tomorrow, mainly watching this hourly chart to see if this buy setup works or fails. And we could, if we just go sideways, then if we get a doji bar at the bottom, usually we continue lower. Like here. See this doji bar right here? And continued lower. So we'll see what ends up happening tomorrow. But I think this is a very interesting time to be a day trader. When we have good volatility like this, honestly, if you know what you're looking for, and I just showed you the 3 steps to every successful trade, it's hard to lose. Because you have opportunities and you have movement. So even if a trade goes against you, you're supposed to kill it quickly. You're supposed to get out quickly. But if the trade works in your favor, you're supposed to manage it right. And ride the wave, basically. Ride the move up or the move down. So I think when there's volatility, as a day trader, I find it, knock on wood, I find it hard to lose. Because, again, if I lose, it's small. But if I win, it's big, usually. So at the end of the day, I just need to catch 1 or 2 trades. And that's it. So I hope you're taking advantage. If you, again, want to trade alongside me, feel free to check out the links in the description. Again, $49 if you've never been a part of the room. This is for day traders. And if you're a swing trader, you can also check out the Strategic Swing Trader newsletter for also $49 for the first 30 days. But for now, that will do it. If you have any questions, reach out to our customer service, info@t3live.com. And with that said, I want to say have a great rest of the week. Thank you so much for tuning in today. Hope you enjoyed today's lesson. And I'll talk to you sometime soon. Take care, everybody. Have a good night.